How have the markets been this year? And how do you deal with volatility? In this episode, we're going to talk about both things. Listen all the way to the end.
We hope you've been enjoying all the episodes from Secure Your Retirement. If you'd like to keep learning and receiving these episodes, hit the subscribe button and the bell so you receive alerts when they come out. We've helped thousands of listeners get on the path to securing their retirement. Now it's your turn. Let's dive in.
Welcome, everyone, to Secure Your Retirement podcast. We are very happy and excited to be chatting with you today. And just as a reminder, this is a new format for us that we started here a couple months ago. The first Monday of the month, Merce and I are going to spend a little bit of time just talking about what happened last month in the market and maybe what are some of those talking points. And then we're going to, after we kind of talk a little bit about some of the things that occurred over the month of November, we're going to talk just for a couple minutes about specific strategies that could help us be able to navigate the uncertainty. Because I think as we look at what's going on right now and what's gone through in November, was really a lot of uncertainty. We had a lot of different big time topics that we're going to walk through today. And I think as we do what we do, which is trying to really help people have peace of mind, regardless of what's going on in the market, there's a couple things we feel that are important. Number one is to educate you on what's going on in the market, just because we want to know, but then have strategies to help us navigate a market, whether the market's going up, the market's going down, it's not doing much at all, whatever that case is, let's have a strategy in place to help us get through those things. So let's get started here, Merce, and just kind of like maybe start to recap some of the things that our listeners would have probably been listening to and having to deal with as we went through November.
Yeah, so I think a good one to start with as we walked into November, we were dealing with government shutdown, and it ended up being a longer shutdown than we anticipated it to be, which means a big part of what we get from the government as far as information, some of those data and those metrics were delayed. Things like payroll data and CPI and PPI, all these numbers that have become really important over the years for understanding inflation and what the Fed is going to do and everything like that. A lot of those data and those metrics were delayed because of the shutdown around a bunch of disagreements around, what should we do? What shouldn't we do? Healthcare was a big topic around the Affordable Care Act and everything like that. And so that shutdown kind of interrupted a lot of the government things. The biggest one that people talked about is the flight, or being able to fly comfortably, and TSA not having the staffing. And so a lot of cancellations of flights, a lot of delays of flights, especially as we head into a time full of travel for a lot of people, caused some issues. Anytime we have issues in our economy, like a shutdown, that tends to sometimes ripple into the stock market, where that big key word of uncertainty comes into play of how long is the shutdown going to last? How is it going to affect a lot of these industries? We're just getting back up and running from the pandemic and supply chains, and now we've got another interruption on a different side of the world, in the government world. So how is this all going to impact the markets? And so we did see November being one of the more volatile months of the stock market this year. Not nearly as volatile as, say, April of this year when tariffs were announced, but it felt similar to it, especially in the tech arena in the AI world. So that's kind of how the month started, with this kind of gloom or this cloud over us around the shutdown and what is it really going to mean. But then the shutdown did end. And so, Ray, do you want to talk a little bit about that and what happened since then?
Yeah. So, 43 days, the government was shut down, and some records were hit over that. And I'll be honest with you, I remember quite a few years ago, the government shut down, and it put the markets into turmoil. And interestingly, in this this shutdown of the government, it really didn't make the markets go crazy. But now you would think, okay, the government opens back up, because what we were headed toward is a scenario where flights were starting to get delayed and actually canceled. We were traveling. My daughter was traveling, and And it's kind of like, am I going to be able to make it home or not make it home? And that's kind of where we were getting, and the anxiety was starting to raise. And now all of a sudden it's like, okay, we've got a deal. Now you would think, well, the market's going to do great. And the markets did do good for just a moment. And then all of a sudden the markets didn't do good anymore. And it was as fast as the government opened back up, as fast as that went, it went right back to the Fed. And it's basically like, where are we at on interest rates? And basically it was like, okay, well now, let's go back and let's start talking to the Fed, or talking about the Fed and saying, are you going to lower rates? Are you going to lower rates? Well, now all of a sudden, because the market's been shut down for so long, well, how can there's no data, there's no real good data to say, where's inflation at? And that's kind of been the problem, is what does this mean now? If we don't have good data, how can the Fed make good decisions? And all of a sudden we're back into some market volatility again. So we're still on this premise of, what is the Fed going to do? Are they going to lower rates again in December? And those are the things that we just really don't know at this point. So if I had to sum up this little mid area of November, you would say shutdown ends. Great news. Nope, it's not great news. We're going to start talking about the Fed and inflation. And so it really kind of put us back in this area of the unknown, which kind of takes us to a little bit of the next point here, volatility.
Right. Yeah. So with the unknown around, or the lack thereof of data, I would say, for the Fed to make good decisions, that's where volatility kind of creep back into the markets. There's been I think two things. One, on the technology side, we've seen AI have some struggles, although the recoveries have been pretty strong too. But your big names like NVIDIA and your Apples and your Googles, and a lot of those AI-focused companies have had some issues here in the middle to end of November. And so this idea of an AI bubble, that word has been thrown around quite a bit. Was this the beginning of the sell-off? But then there's been a nice recovery in AI-type stocks over the last few days as we ended November. So that's been one that was jarring the markets, is this uncertainty with AI and where that world is headed, and are we overexposed in that world? And so there was some selling that happened in that side of the market. The other being kind of more globally in the market, around how much of the U.S. or how much of the world revolves around what the U.S. Fed does and the interest rate environment. And because of the lack of some of that information around payrolls and around unemployment, we had to wait on some decisions and thought processes. And basically there was a worry that would there be a December cut or not, and that spooked the markets, because going into or prior to the shutdown, it was pretty clear that it seemed like there would be cuts in November and December as well. That's changing, and there is a notable friction between President Trump and Powell, and Powell's term is almost up. And so what does he kind of do here in this short term that he has remaining? So cause some issues, cause some volatility. Unemployment is up a little bit, which is making people nervous. With the shutdown, people decided to retire earlier than expected as well. So the labor market is seeing some issues, which makes it a little bit harder to continue to make moves on the Fed side. And also the CPI and the inflationary numbers are still not where we want them to be. So it's this constant battle of the economy and inflation. So those are I think the two big key things that happened towards the end of the month, and that's peaked up some of the volatility. And so December is going to be a very interesting month. It is the last month of the year. So historically, it's done okay, but there are always times where we could have an issue in December, like in a 2018 type of environment, or a 2015 or a 2011. Those are all end of year types of sell-offs. So there's there's a lot of risk that we still see in the markets right now, especially given the scenarios we're in. So with all that said, I think that we've had a couple of key themes here. How do you sum all this up for us, Radon?
Yeah, I think you just sum it up with one thing that ends up being good leads us right back to something that gives us worry. And I think right now, inflation is still going to be one of those things. What is the Fed going to do? Are they going to be able to lower the rates? And by the way, this whole thing going on, you mentioned NVIDIA and that, we're starting to see a lot of news items around the fact that, are we in an AI bubble? And is this something that's going to reflect what we saw with the tech bubble? I will tell you on that one real quick, I don't think we're seeing the same thing at all as to what we saw with the tech bubble. But Do we have a correction come toward AI? That I do think is possible, but that how much longer before you get that kind of correction? That's the thing that remains to be seen. So if we had to sum it up, volatility, while not major, is here. It's always here, by the way. You don't ever have a market that doesn't have some volatility. There's just the markets. And I think as we look ahead and say, well, where are we looking in the next month or so? I think we need to look at inflation. Where can we get some good data that will help us to understand that? What are people going to do on spending? I think this holiday season is going to be looked at very, very specifically around personal spending. What is that going to look like? Are people nervous and pulling back on their spending? And then I think also the next big thing is mortgage data. What are people doing? Are they buying homes? Are they applying for loans? Because the interest rates are where they are, where are we going to, how are we going to see all this play out? So that's kind of where we're headed here for December. But we don't want to just talk about the markets and kind of give you all that information and talk about volatility and talk about inflation and talk about those things and not talk about a good, sound, risk managed investment strategy. One of the things that Merce and I talk about all the time with our clients and with those that are talking to us is we feel that there are 5 critical areas that lead to a successful retirement. The number one on that list is risk management in our investments, meaning we don't want to just go out there and invest in the market without a good strategy. And I think we do a really good job of laying out what that looks like. And we keep it super simple. This is not a complicated thing. We put a lot of work into it. We spend a lot of hours every single month making sure this all runs correctly. But Merce, could you just kind of maybe remind our listeners, and some of these listeners are people that are not working with Peace of Mind Wealth Management. Many of our clients listen to this. So just remind everyone, when we talk about this idea of volatility, how do we teach to have things structured so that you don't have crazy anxiety?
Right. Yeah. So while the theme of this year has been, tariffs, inflation, government shutdown, AI, volatility, that's really just the theme of this year. Next year could be something completely different. Next year's an election year. Next year could be, have issues, or inflation is not figured out, or the next war that we're going to be a part of, or it could be anything, right? Volatility is triggered by moments that happen inside the stock market and outside of the stock market. So it could be anything. So having a sound investment strategy that is there to address risk and your concerns about risk is going to be very important, not just for your ability to sleep at night, but also your ability to maintain the cash flows that you need to kind of live the way that you want to live. So we do that in a what we think to be a simplistic explanation. Realize that there's a lot that goes into each one of these categories. But the simple of it is we like 3 buckets. We like to have a cash bucket, which is basically going to be your operational money, a couple months worth, 6 months worth, whatever that rule of thumb is for you that makes you feel comfortable knowing that you've got the cash that you need for a certain period of time, ready and available. And then we have money that we want in a growth bucket, which is pretty much stock market based types of investments, or investments that are going to be subject to risk, but also have a good track record for growth. We need long-term growth to beat out the inflation. We need long-term growth to build out our legacies. But how do we balance that amount of risk? Well, we balance that risk that comes with the stock market with sometimes assets that are outside the stock market or not related to the general movements of the stock market. And we call that the income and safety bucket. For a lot of people, that's going to be in the realm of the insurance and the fixed index annuities that we talk about. The side benefit of rates being still high, relatively high, is that some instruments do very well in a high interest rate environment. And these are longer term investments, so we can lock in higher rates for longer. And that's a positive to us. The nice part about this bucket also is that if we do walk into, say, 2026 or the end of this year, and we see a 15, 20, 30% sell-off, which is never off the table, our safety bucket is not exposed to that. So while we will lose some money in the growth side, not all of our assets are in that growth bucket. And so that's what that provides the ability for really good true risk management, so that at the end of the day, in a simple way of putting it, not all of our dollars are working in the same direction at all times. So how do we do this? There's a handful of different tools in the tool belt. We have safe assets, we have growth assets. We blend these two together to achieve a desired type of downside risk exposure, but also the ability to withdraw our money without being worried about it being down, and we still need to draw on it. So that's the buckets. Obviously, there's nuances there. There's things to talk about. There's things to be educated about in those three categories. And we're always happy to have those conversations with you.
All right, everyone. We appreciate very much you taking a few minutes and talking with us, or letting us talk to you maybe. But as we say always, if you ever do want to have a conversation, feel free to go to our website, pomwealth.net. Go to the Contact Us page. We would love to be able to have a conversation with you, talk to you about your personal situation. Whether you're a client today or you're just looking at us, we would love to be able to have that conversation with you. We hope you have a great week. We will talk to you again next Monday. We hope you have enjoyed this episode of Secure Your Retirement. If you would like to learn more, we have actually created an online course called 3 Keys to Secure Your Retirement. This video course helps you to think through all the different steps as you get ready to plan for and live throughout retirement. You can access this by going to our website, pomwealth.net. In addition, you can also subscribe below to our podcast called Secure Your Retirement.
For more retirement tips, check out these videos. Also, if you find them valuable, please subscribe to our YouTube channel and give us a like.